they are giving us the best cues for the equity space. And just again to reiterate, Bank Nifty up over 1% now. So I think that's almost 300 up at this juncture. Yes, 315 up. So 1.2% higher on the Nifty Bank, and the Sensex already touched all-time highs and continues there. It's up about 256 now. 36,500 crossed, and the Nifty up 11,030. And you must pull up the Nifty as well. It's actually a gently sloping upward curve. So even if you had bought the gap up, you are still somewhat in the money, though you would be more in the money when it comes to the Nifty Bank. That's where the gains are very strong. Meeting Mr. A. Balasubramanian of Birla Sun Life, and of course CEO of AMC as well. Bala, thank you very much for joining us.
Thank you.
Actually, we wanted to discuss the June flows with you. The flows picture indicated that equity flows have seen a dip of about 32% from the previous month's levels.
Yeah.
Is that concerning at all? As a veteran and as an AMC head, how would you look at this trend?
Of course, the month of June was a little bad, in the sense that compared to the previous month. But the industry has been adding new incremental assets have been positive.
Yes,
I think the way I see
it's a slowdown in the increment.
The slowdown in the incremental rate of growth has been slowing down. There is no doubt.
Okay.
But I just did some comparisons. So I just looked at the the first quarter of last year.
Yes.
The total inflows in equity of about 50,000 crores.
Okay.
And this quarter, especially April, May, June, is about 40,000 crores.
Okay.
The aggregate is lower by about 10,000 crores, we can say, compared to the last year. But having said that, the run rate, which generally I count, is about ranges anywhere between 12 to 15,000 crores. That's the range that we take actually the run rate per month terms of equity inflows. That run rate now is dropped about 9,500 crores.
Okay.
The other one which you generally look at, where we are seeing actually incremental subscriptions keeps coming in, is an SIP. That book size has been growing. Now today the aggregate inflows into the mutual fund in the form of an SIP is close to about 7,000 crores, roughly about 6,950 crores. That we have been seeing a continuous registrations coming in, both from new investors as well as the existing investors. Okay. Therefore, this current investment, that trend that we have seen, the SIP flows continues to remain good, where the lump sum used to come pretty large, especially last year. That seems to have dipped a little bit. But that's not concerning to us, mainly for one simple reason. The last few years, industry has been structurally becoming stronger in the form of going more retail and reaching out to the B30 market, as well as the focus has been more on adding new SIPs, new customers. Therefore, that spread is actually getting widened.
Okay, I'll come to those numbers.
Yes.
Just one question before that, before Surabhi takes over. You all don't give us very clear redemptions data. We get inflow data. Can you tell us, was there any panic and therefore any higher redemptions in June?
Not really. I think again, the redemption is only one number, but I think we normally look at the gross inflows and the net inflows.
Okay.
The gross takes care of course, how the volumes are. That's a true indication of the sentiment. The net inflows actually is the one which ultimately comes into the hands of money managers to manage money.
Yes.
If you look at each of the fund houses, would be getting net inflows, but only the question is the run rate which I earlier mentioned about. The run rate, the peak was about almost 28,000 crores in the month of September.
Yeah.
And 20,000 crores, that's the peak.
Yeah.
And from peak of 22, now it dropped about 9,000 crores, which has been, we have seen actually a gradual dip. That again, I would say the function of sentiment, function of the market, the movement in the recent past, and so on and so forth.
But sir, the structural change in this period that has also happened is that taxation has changed. Let's face it, it's a reality now. Which is why balance funds, which were getting in almost as much money as pure equity funds, that's seen a big drop since this dividend tax came in. Obviously, LTCG is there as well.
Sure.
Is there any category that can make up for this decline? Because that's where, I mean, if the camel's back has been broken in terms of the flows trajectory, it's balance funds.
Yeah.
So what is the industry's view on this now?
There are two things that we looked at it. In general, these flows have been mostly towards large cap, multi-cap, then comes to the balance fund. The last year was the exceptional year. The balance fund had seen a big growth. And within the balance fund, there are two types of balance fund. One is the 100% equity oriented balance fund. The second is the balance advantage fund, where we have seen a lot of money coming in, as against, say, instead of parking the money in fixed deposits, go and park your money in balance advantage fund kind of things. As you rightly mentioned, that those who have bought purely on expectation of dividend, Again, probably people may feel with somewhat of disappointment, because especially in a falling market like this, you will not have enough reserves actually for you to pay out the dividend. Therefore, anybody who has been buying on that basis naturally is expect to it's natural to expect some bit of slowdown. Okay, having seen that, I think large flows in our view will continue to come into the actively managed funds, both in the large cap and multi cap funds. That's where we see it, and equity oriented debt funds, equity oriented balance fund would also see the reasonably good inflows. That's where we see it.
Continue with what Surabhi was asking. Of course, the tax element was there in balanced funds, but did balanced funds get a bit missold in a part of FY17 or FY18? They almost made us believe that you will get it. It was behaving like as if it is debt,
income,
assured income. Maybe that exuberance led to some misrepresentation.
No, I call it as a miscommunication.
Okay, miscommunication.
Miscommunications. Okay. In the sense that, say, any mutual fund schemes, if somebody is buying on the expectation of
pull them up, no?
Yeah, somebody is buying on the basis of an expectation of a dividend. It's of course dividend is one component is there on the basis of you make an investment. It's nothing but you get something in your hand every month in the form of dividend. And days like today's where the equity markets have been volatile, and we have seen, of course, even the fixed income market as well.
Yes.
Maybe the time will come where there will not be enough reserves actually for somebody to give a dividend.
Which is why
but that does not mean the schemes are bad. That does not mean investment choices are bad.
No. It was the
But I think, as you rightly said, it's yes, in some sense, expectations have to be set right. And second is miscommunication also should not actually lead to a.
It was very clear in January. I remember Swami Arora even tweeting about it that this is going to lead to some shocks in terms of this is not assured return, and therefore some people may therefore recoil away from mutual funds later on.
Absolutely. Sir, now also please tell us what's happening. You said money is largely to come in large cap funds and multi cap. What about mid caps and small caps? Because that's where the pain has been. What is the flow trend in this category? Because we don't have access to that data. We don't get the breakup.
Yeah. No, mid cap in general, I think the SIPs continues to come, but the incremental flows otherwise last year was actually trending towards mid cap. That seems to have slowed down to some extent. And second is a lot of inflows also used to come in the PMS. We don't generally track that category. But I think in PMS had seen a lot of inflows on expectation that we'll invest in mid cap, therefore we'll be able to generate alpha. Given the fact that the market now is divided significantly between the large cap, Sensex focus and the mid cap focus, where there is a huge divide in terms of return. So we have seen some bit of drop in there as well. I think
you raise a very important point. I think the regulator will do the market a huge service if they start declaring proper PMS data, so we know the kind of inflows that are coming, if not on a monthly, at least a quarterly basis.
We have more questions from what the regulator said yesterday as well about a debt index also, and therefore a debt ETF.
Yes.
Those questions in a minute. We continue this very interesting conversation with Mr. Balasubramanian on the other side after this break. Having this interesting chat with Mr. A. Balasubramanian, CEO of Aditya Birla Sun Life and Chairman of the AMC. Mr. Balasubramanian, before I come to the debt ETF, which I want to discuss with you, you said that the B30 cities have also been tapped into, and the number of individual folios have also increased. Any numbers that you can give to give us an idea of the depth and width of the industry?
Yeah. It's roughly about, today if you look at the whole industry, it's about 7.2 crores folios industry has got. The unique customer base is roughly about 1.9 crores. When I mean unique customers, a single PAN number. And that has been growing year after year. Even this year too, that is from April to June, the folios which has been added to the mutual fund industry is about 29 lakhs. So I would assume that 7.2 crores folio would have gone to maybe about 7.5, 7.4 or 7.5. So that 29 lakh folios also come from, in general you have seen the thumb rule, so about 50% used to come from T15 and 50% used to come from B15. Now that the B30 has come in place of B15, I would assume about 60% would have come from the T30 and 30% would have come from B30. And one of the big focus that industry has also been doing for the last few years in terms of increasing the penetration of the industries into the districts, which would have probably ever seen money coming into the mutual funds, in order to ensure that we increase the customer base across the country.
Now, before Lata gets to the debt ETF, I have a simple question on equity ETFs. As a category, more money is coming in. This quarter, of course, because of Bharat 22, I mean, the figure was much bigger. But why isn't enough being done? I mean, ETFs as a category or even index funds is not really taking off in India even now, though it's the biggest category internationally. So So, I mean, are you expecting that to change?
No, very interesting point. I think ETFs as a category, there is a merit for its own place, and given the fact that it's hugged the index,
large
and
caps, it's
largely
simple, low cost investing.
low cost investing, there is no doubt. But if you look at the historically, for the last 3 years, 5 years, 10 years period, Indian money managers have been beaten the benchmark ranging from 3% for the large cap
we have
focus
heard
funds.
this ad nauseum.
No, if it is quite phenomenal.
Yeah.
There is no doubt in the last 6 months, a majority of the funds are underperforming the Sensex and Nifty. There is no doubt on that. But at the same time, that does not mean that what they have generated in terms of alpha for the last, say, 5-10 years is not going to exist in the future.
Yeah. Okay.
So that, I think, is something which will make a case for actively managed funds still remain one of the focus area for most of us.
Okay. And now to come to what the SEBI chairman said yesterday, Mr. Tyagi said that they are clearly looking at debt ETFs as well.
Yes.
Is the industry ready? Do you have a debt index which an investor can track and have the confidence to invest in an ETF?
See, of course, the mutual fund industry, if again look at 23 lakh crore, leave aside 9.5 lakh crore or 10 lakh crore of equity assets, rest of it is coming from fixed income.
Yeah.
So therefore, the expertise which the mutual funds have built in the last few years is phenomenal.
Has, yes.
At the same time, there are various indexes also come all these years. There is one index which exists, which is aggregate of all mutual fund schemes. Second is the index which comes on the base of the number of securities select both in the government bonds as well as corporate bonds, and then create a pool of portfolio and then create an index. Therefore, creating debt ETF absolutely not an issue. I think only the challenge which will be there is the way we have seen the 10-year benchmark keep changing every now and then, as the government of India keeps issuing 10-year benchmark. A similar kind of situation we may face in debt ETF as well. The second is in terms of mark to market, when you actually do the mark to market, as it exists in actually the fixed income schemes for mutual fund, to what extent it will actually remain an attractive question mark. And third, of course, if you have to replicate those securities, which is a part of the index, then if the issuance of those securities are not available in those period of time, at the time of we get money, then how do you actually replicate those securities, underlying securities in terms of portfolio?
Liquidity of the underlying
Correct.
security.
Therefore, while it is a new novel concept.
How far is the debt ETF? You think it's a little distance away?
I think this year, I think if all of us put together as an industry, we will find some solution.
Okay.
Also, I would also like to mention that we at Balasubramanian Life Mutual Fund, we used to have a fund which used to simply track the CRISIL index,
okay,
and we call it as the index fund.
Okay.
And because we couldn't grow in size, we actually knocked it off.
Okay.
Yeah.
We're talking to you, sir, at a very interesting time. Just to come back to the market, this is really building on gains right now. We're pretty much at the day's high, 11,030. It's firing on all cylinders. I mean, you've got financial stocks moving higher, OMCs, the likes of Reliance. So it's a good morning of trade once again. Coming back to the main point, I mean, the market's mood also impacts flows almost directly, in direct proportion. From here onwards, do you believe that maybe this could be a bit of the trough of the monthly numbers as well? Would you expect an upswing again immediately?
So I will take the way we see is we are basically in the consolidation. For the last 5 years have been the best period for Indian mutual fund industry.
And also, if I could just add to that question, why I asked you this was because this is also a transition period with SEBI's rulings coming through on the market capitalization. So schemes were undergoing some changes, etc.
Yeah.
So is all that also behind? So then, in terms of flows, what should we expect from here?
So one, of course, they're all behind us.
Yeah.
I think the consolidation of schemes is, I think, some of the best thing that has happened for the industry in terms of improving the communication, standardized communications across all markets, across all players. Now, having done that, I think most of the money managers would have adjusted their portfolio. Now start looking at actually in terms of way forward. The way we see is the efforts to build the industry to the largest size continues to remain very, very big. I think every mutual fund industry is actually putting an extra effort in order to ensure that take the mutual fund industries to every citizen of the country. Recently, we launched a program called Jan Nivesh, again with the intention of taking actually into the entire market, entire citizen of the country. Therefore, I would assume this current strength that you are saying is more of short-term blip in nature, but I think it will come back in terms of growth. As long as we are able to have a run rate per month run rate, anywhere between 10 to 12,000 crores, I think we all should feel happy.
10 to 12,000.
Yes, yes.
All right. Thank you very much,
Thank you.
Bala, for joining us and giving us some color on the extent of mutual fund industry growth and participation and the eventual, hopefully, a debt ETF as well.